like you're getting nickel and dimed at every turn by your bank, your bills, even by companies that won't let you cancel a subscription without jumping through endless hoops? You're not imagining this. Today, we're going to break down how government protections are being rolled back and what that means for your wallet going forward. From overdraft fees to medical debt, the system is quietly shifting and not in your favor. So, quick question before we dive into the details today. Have you been hit with a surprise fee recently? What was it and how much did it cost you? Share your story in the comments because I want to hear from you. And if you're struggling with medical debt or credit card debt that you're unable to pay, our sponsor Care Connect USA has a debt relief line that may be able to assist you. You can reach them at the number that you see on screen, and they can help you evaluate what options are available to you. So now let's break this down step by step, starting with that dreaded overdraft fee. If you've ever gone a few dollars over in your bank account, you've probably been hit by a big fee, usually around $35. That's called an overdraft fee. And for folks living on a tight budget, that can be absolutely devastating. Those fees can stack up fast and make it almost impossible to survive. I know because I've been buried in them before. Well, just last December, the Consumer Financial Protection Bureau decided to take a fantastic step to protect low-income Americans. The CFPB closed the loophole that exempted overdraft fees from lending laws and forced big banks to make a choice. They could either drop those fees to just $5, choose to recoup only their costs and losses, or they could start following all the lending laws when issuing overdraft fees. Now, at the time this change was issued, CFPB estimated that it would save about $5 billion in annual overdraft fees, or about $225 per household that typically pays those fees. And those are usually low-income households. So this sounds great, right? Well, unfortunately, most lawmakers did not agree because just last week, they completely reversed that change. The Senate recently voted to repeal the cap on overdraft fees, mostly along party lines. This means that overdraft fees are now back to their previous rates, which were typically around $35 each. Big banks like Wells Fargo and JP Morgan Chase make billions of dollars a year from these overdraft fees. This vote definitely helps them, but it hurts everyday people who are just trying to get by. Now, I really wish that this was the worst news that I have for you today, but unfortunately, our next update makes this a 1-2 punch, and that is really going to cause a lot of pain for people with low income, because they're not just increasing the amount of each overdraft fee, guys. They're also increasing the total number of overdraft fees that you're going to get. Because the very next day after they made that decision, the CFPB announced that they will no longer enforce the rule that stops payday lenders and high-interest lenders from trying to pull money out of your account over and over and over again. See, back in 2017, CFPB created what was called the bounced payment rule. This rule said that payday lenders, certain buy now, pay later lenders, and high-cost installment lenders who charge more than 36% APR had to stop trying to pull money from your account after 2 failed withdrawal attempts. That means that they could try once, they could even try twice, but if both of those payment attempts failed, then they would have to ask you for permission before they could try to draw money out of your account again. I remember being so relieved when this rule came out because it stopped those high-interest lenders from just repeatedly trying to yank money out of my account. I once had a bank account closed because one particularly aggressive lender kept trying to force a payment to go through, and sometimes they were running it multiple times a day, and the overdraft fees piled up so high that it just completely overwhelmed my ability to repay it. So the bank and I closed that account and opened a new one so that they would have to stop. This bounced payment rule was a lifesaver, an incredible protection for low-income people who were just doing their best to get by. Now, here's the thing. That bounced payment rule I just told you about is still technically on the books. It's still part of the law. Even after parts of the original payday lending rule were repealed, the courts, including the Supreme Court and the Fifth Circuit, agreed that this one small protection should stay in place. They upheld the part of the rule that said that lenders couldn't keep hitting your bank account over and over again after 2 failed tries. But now, under current leadership, the CFPB has decided that they just aren't going to enforce that anymore. They literally said they are not prioritizing enforcement or supervision actions with regard to any penalties for breaking this part of the rule. So even though the rule still technically exists, lenders know that no one's going to come after them for breaking it. And we all know what that means, right? It means payday lenders, high interest installment loan companies, and even some buy now, pay later lenders are going to go right back to hammering your bank account with withdrawal attempts. And every time they try, you could get charged a non-sufficient funds fee from your bank or an overdraft fee if it pushes your account into the negative. And of course, those fees are going to cost more now. So this can snowball so fast. One missed payment can turn into 3 or 4 bank fees in just a few days. The CFPB also says that they're thinking about changing the rule completely. They're considering narrowing it, maybe even giving lenders an exception. And the government, they're trying to dismantle the Consumer Financial Protection Bureau altogether. In fact, a U.S. district judge had to get involved and issue a preliminary injunction stopping them from shutting down entirely. Now remember, Congress created this organization to help protect Americans' financial security. This is the organization that is supposed to help protect people from predatory and unfair financial practices. And that's important work because throughout history, a lot of financial institutions have been downright predatory when it comes to serving people with low incomes. Now, consider these thoughts from Dr. Matthew Desmond in his bestseller, Poverty by America. Quote, every year, over $11 billion in overdraft fees, $1.6 billion in check cashing fees, and up to $9.8 billion in payday loan fees. That's over $61 million in fees collected predominantly from low-income Americans each day, not even counting the annual revenue collected by pawn shops and title loan services and rent-to-own schemes. When James Baldwin remarked in 1961 how extremely expensive it is to be poor, he couldn't have imagined these receipts, end quote. As one advocate at the National Consumer Law Center said, and I couldn't agree more with this, it's just plain wrong to have stronger protections for payday lenders than for the people out there who are trying to put food on their table. Do you agree? Drop a quick yes in the comments so I know we're on the same page about this. Now, if your blood pressure isn't already up, we need to also talk about medical debt. Medical bills are already a nightmare for so many families. People go to the hospital because they're sick or they're hurt, often without any choice at all, and then they get slammed with bills that they can't afford to pay. It's stressful and it's scary and it can absolutely wreck your credit score. Honestly, it's at risk of wrecking my credit score right now because one of my children has developed a completely debilitating mystery illness that no one can seem to solve. So we've been chasing down specialists, visiting doctors, and we've been to the emergency room more times in the last year than I think we have ever been before in our lives combined. And we're still no closer to getting answers. The medical bills have been pouring in fast, and honestly, it feels like insult to injury, right? It's not like this is something we chose. Nobody wakes up and says, you know what I'd like today? A $3,000 trip to the emergency room. It's not the same thing as planning a luxury vacation, am I right? That's why I was so relieved when a while back the CFPB made a rule to stop unpaid medical debt from showing up on credit reports. They seem to understand that medical debt isn't like credit card debt, right? Medical debt is often unexpected. It's often not even your fault. And it usually comes at a time when you're also financially vulnerable because you're missing work or facing other financial hardships. So medical debt is not really a good way to measure someone's overall financial responsibility, right? So a while back, CFPB made this rule to stop unpaid medical bills from showing up on your credit report. But now some members of Congress are trying to reverse that too. They want medical debt to count against you again on your credit report, where it could hurt your ability to rent a home, get a loan, or even land a job. That would be a massive step backward, especially for families like mine, and maybe families like yours, who are doing everything we can to keep up with life's curveballs, even when those curveballs are absolutely relentless and absolutely soul-crushing, and they just don't stop. Medical debt is not a choice. Nobody wakes up and says, you know, I'd love a $2,000 ambulance ride today. So putting that back on a credit report is not just wrong, it's cruel. So if you're willing, please reach out to your elected senators and representatives in Congress and help them understand how important this protection is. Don't wait. Please reach out right away. Make your voice heard. It is so important. And your story could help shine a light on how unfair this system really is. And finally, because yes, there's more, we also need to talk about those subscriptions, right? So how many times have you signed up for something with one easy click, and then when you try to cancel, it's a total headache, right? Maybe they make you call customer service. Maybe they keep you on hold forever. Maybe you're transferred again and again and again and again, multiple times, because you just can't seem to reach the right department who will actually click the button to cancel your subscription. Or maybe you have to do it online and they just hide that option, so you give up and keep paying. You are not crazy. All of this is by design. A lot of companies do this on purpose to keep your money coming in. That's why the Federal Trade Commission introduced something called the click to cancel rule a while back. This rule says that if a company lets you sign up for something online, they also have to let you cancel it online. And the rule says that it should be just as easy to cancel as it was to subscribe in the first place. This is common sense, and it's long overdue. But once again, big companies don't like it, so they've taken the FTC to court, trying to block that rule from taking effect. And now the future of the click to cancel rule is in the hands of the 8th Circuit Court of Appeals. And a whole bunch of consumer groups are stepping up, asking the court to protect people like you and me from these shady, deceptive business practices. Because let's be real, if canceling something takes longer than signing up, that's not an accident, that's a trap. Anyway, we'll be watching that one closely too, and I'll keep you updated on its progress. But in the meantime, I just want you to take a breath and sit with all of this for a second, because this is really heavy, right? In a matter of just a few weeks, we've seen some of the most basic financial protections start to fall apart. Overdraft fees are going back up. Payday lenders are getting a free pass to give you as many as they want. Medical debt could start hurting our credit reports again. And shady subscription traps are trying to stay in business, and it looks like they have a better chance than ever. And who does this hurt? It's certainly not the wealthy. It's not the corporations. It's the people that are already stretched to the limits. Families, seniors, veterans, folks on fixed incomes, people who are just doing their best to survive. But I want you to know that you're not powerless. You can still speak up on these issues, and you can still push back. You're not alone here. So whether you've been hit with junk fees, had your credit ruined by medical debt, or you've been stuck in a never-ending subscription service, you deserve better. We all do. So here's what I'm asking you to do. Share your story in the comments. Let people know they're not alone. And then if you feel all fired up about this like I do, call or write to your elected officials. Tell them what these fees are doing to you and your family. Do what you can to encourage them to make better choices. And if you need help, really practical step-by-step help, make sure that you head over to lirlinks.com/free help to sign up for our email list so that you never miss another update. We're going to work on putting together free guides to help you fight these fees, reduce your bills, protect your financial future, and so on. And please don't forget to check out our other videos for more ways to save money and get free stuff. I'll see you there.